What's going on? Chris here, and we're going to go over the weekly overview. So let's go ahead and just undo this. So, Covey Portfolio Performance Overview. It's probably the most positive thing here. Second place, so I think I clinched it. Let's compare the results of Mark just really quickly because I made 3% on the day. He made 0. I made 4%. And I don't think it's enough to clinch it away from Alpha MD. I mean, he made 4%. I don't know. We'll see. Like, total monthly gain, I mean, he came back from a really low spot. So I think he earned it. I mean, the spread on just coming back that hard is, I don't know. Like, can he do it multiple times, comparatively? I don't know. He monthly percent gain of 101 starting from 2021. So I don't know. I guess that's impressive. Like, I'm more impressed by Mark and his performance than by Alpha MD. Yeah. So as long as I beat Mark, I'm okay. Yeah, Mark is the real contender in this thing. So I'm okay if I beat Mark. So I'm satisfied. We've got second place, roughly. As long as I beat Mark, we're okay. So that's the Covey, and then I switched long. I dumped my short positions today, and I went long once we broke the 15-minute market structure break right here. As soon as we broke it, I went long on both all crypto and the S&P 500, and getting ready for the scam pump. This is technically the scam pump. We got a little room to go. Roughly, I would say 2%. Yep, 2% to the upside. And I'm going to ride that into there and then get ready to go short again. Because I think this is a huge scam pump. So because I was thinking we're in a bear trap, and that's a scam, we're going into the scam pump, and to go long, I was trying to go long a lot of times, and Wednesday was a bad day to go long. And that's shown by the performance here. This was, I think, the 27th, Tuesday, and then Wednesday, I just nuked hard. I reclaimed a little bit on Thursday, about $500 each account, and then down $37 each account on today, which is not bad. I can bring it back. It's totally possible. Just stick to my rules. I did an overhaul of my alerts, so it's on the way. But I wanted to at least expose myself to some pain there, just to hold myself accountable on the accountability. It says journal overview. I think that's pretty much it. End of week account performance. I guess I showed that. The journal overview. I guess to expose myself to more pain, we're going to go over just the days I did well in following the rules and the days I didn't. So 27th, 20th, 29th. 27th, I only had one fraction. I risked a little bit more, over 1% per trade. And then Wednesday, I broke more than one rule. I kept on doubling down on trying to get my position back, and I just lost it. I went off the rails, basically. And then Thursday, a lot better. Followed all the rules. I didn't surpass 1.5% loss on the day. I think I stayed within it. And then this, so I followed all the rules. And I mean, it makes sense. That's the day I got $500 per account. And then, wait, that was the 29th, I think. No. Yeah, the 29th. And then today's the 30th. I didn't make one for that yet. But that's pretty much the overview. As far as like the main trading rule that it broke was not trading during a high probability a day. And I think I was at the end of my window for the trading window. So I gave it a chance to see if I could get some on the long. And I mean, it's no big deal. I think 0.5%, It's no big deal. Weekly closing thoughts on the S&P 500. So, we look at here on the weekly. We were to remove the traps. We're at weekly support. We closed above weekly support, and that's it. It pretty much flipped. It's holding as support, and we're about to go into the bull trap zone, and then we came from the bear trap zone. We hit support on the bottom of this bear trap, and the bears got really confident on Wednesday and today, and they pushed it down. But today, on Friday, was a higher low. So that was that. And then on the daily, we came up into resistance. We actually went below this daily resistance that was support, and went down to test to see if there was any support. And turns out there was, and it looks like we could go higher to this target to fill the gap, or at least, I think at least to fill the gap. We'll see how long it takes to distribute up here. But it looks like it's going to be a nice long up into here until the bear trap gets filled, and then we're done with that. So that's the S&P 500. Going on to, we could look at the market structure break. The one thing that was worth noting was that on the H4, it was really chaotic this week. One could say, it makes sense. It's the last trading week of the year, but it was something worth beholding, at least to see recognize when it's really bad. So nested breaker here, one breaker to the downside, one breaker to the upside, and then we come up into it again and we engulf it, and then that's a change of character for the upside. So now this changed for more of a bullishness, but then guess what? We spike it out. So now we're pretty much ranging. We're exactly in the middle, but I feel more confident that we're going to the upside based on the weekly close and daily close above the flip. That's now support again above the 72 moving average. It makes more sense to me that it's more bullish. So that's kind of what I'm witnessing. And the idea is that we would go and touch this naked breaker to the downside. We test it. We could blow through it, or we could just test it and then get rejected, and that's kind of what I'm hoping. A nice 2% rally, and maybe it's enough to put me back in the good graces of 70 grand. That's the hope. All right. We'll get rid of these. So going on to oil. Oil is pretty much following the S&P 500. I got rid of my oil short, and it came really close to closing the week above that, but it didn't. So we're going to see what happens to oil and that. But I got rid of everything short, and I got long the S&P 500 and Bitcoin and Ethereum. That's it. And we're going to wait to see how that plays out. Now with Bitcoin and Ethereum, they haven't closed on the week yet, so we got to wait until that closes to really do an analysis on them. But oil, that's oil, and it's not in a really bullish position comparatively compared to the S&P 500, but we're assuming the correlation exists, that oil will follow the S&P 500. Credit spreads, we're going to take a look at that. So the weird thing is, when we see a deviation where S&P 500 is going up, but HYGH is going down, that's bad. Usually it means that the smart money is right, and we're seeing lower high closes on the days, and I don't know, we're underneath resistance, so it's not good, and that's kind of why I'm thinking that the bullish movement in the S&P 500 is a scam pump. That's what makes me believe that. LQDH, same thing, except this time we closed the day below daily support all the way back here. This is now resistance. So we're below resistance now, and we flipped it. So we're below support. We flipped it to resistance, and we're gonna go fill some gaps. Okay, so that's the credit spreads. They look like they're going down while the market's going up. Divergence, smart money, right, or is it wrong? And I say they're right. Euro, the currencies. Let's take a look. The one that's going to be really interesting is the euro. So euro got rejected off of the weekly resistance, and this daily resistance has been holding, and it's been rounding here, and we're going to see if that gets totally rejected for a lower high and just starts to develop a trend. But we closed in this like no man's land above the yearly open. So now there's a new yearly open, and then below the resistance, and we got to see what's coming. Like who knows what's going to happen next, but it looks like it's a little top heavy. When it's closer to resistance, you kind of don't want to touch it until it gets on the other side of the line and it closes. But until that happens, we have to assume that it's going to be weak up into these lines. All right, and then we go to Japanese yen. So the Japanese yen closed the week or in the day higher again. So this is a really risk off kind of thing. So now that's like support. We reclaimed this high. So these Japanese yen bears are having a really hard time suppressing price. The next resistance point is right there near that weekly doji. But yeah, it's Japanese yen is having a hard time just staying down. It's going up and up, and fragility is going up and up. You know, people want to keep on looking at the dollar. The dollar is not a sign of fragility. I mean, if the dollar's falling, yeah, but Japanese yen is the risk-off currency because it's so cheap, and the dollar's really good to look at when the market's not fragile. Which brings me to gold. Why not? Kind of my competitor was really looking at gold. So there's a higher weekly close on gold. So a lot of bulls in gold. And you would think that with the dollar, I think that what they're doing is they're watching the dollar going down. And I don't know, like I'm really curious to see if we're gonna take out the weekly lows. Just because it just doesn't look good, and a huge rising wedge. Hello, a huge rising wedge here, and this could totally break down. Looks like the yearly open is right here. We're underneath it. Let me double check. Yep, that's the yearly open, and now it's going to come down to here, and we're going to see if it starts to just keep on rounding out. We're looking for that deviation, left shoulder, right shoulder, and then just fall off. And we got some points that we're looking at for a deviation. So as long as it comes back down here, that's kind of where we're going to look for a deviation. And I would say gold is a hold. I would say wait on gold. I would even move the no man's land up. Like I wouldn't get involved in gold until we get above here. Because this, I don't know, I think it's suspect. Like even though that the US dollar is going down, the yen is in comparison to the yen. Like and gold is not above fragility. So that's my thoughts on that. And then we'll go to the VIX. So VIX looks like it closed below the weekly support. So then I guess it's going to go lower. So we'll see us going down, and maybe this is the beginning of the swing failure pattern, like a deviation. We did close above this last week day. last day's support right there. So we're kind of in this no man's land on the day. On the week, that's kind of we're I don't know, we're caught below the weekly support and above the daily support. So we're in this like weird no man's land. But now what can you do? But yeah, I don't know. Gold is just weird. I don't like trading gold. I feel weird about gold right now. Like I want to be bullish gold, but I think it's just too early. I just think wait until the recession actually comes, and then it's stagflation. I just think it's too early. And even though we broke this last one, we just broke it. Never mind, we just broke it. I don't know. I feel like this is going to be part of a fake run. We'll see how far it gets on the rally in the S&P 500, but I don't expect it to last past the first week of January. So that's pretty much it as far as like videos to come. It's just the Charles Schwab thematic portfolio, robotic revolution, and I had the article of the Wall Street Journal about the robots, and I kind of put that in the last video, just why I'm so interested in this in the robots and the portfolio about the robots, just because they're putting it in FedEx and Amazon for discretionary, and discretionary they employ a lot of people, and they're definitely going to juice their profits if they're able to do away with the workforce, their biggest liability. And the robots don't have to sleep, they don't have to eat, and they don't need a huge amount of pay. So it's a huge juicy profit margin for Amazon, and a lot of people are eyeing Amazon as like some kind of a recovery stock after the recession, and I think it's totally possible. I think after the worst comes, like Amazon and FedEx and all that, we'll be able to reap a lot of profits. But we'll be beginning on that portfolio maybe this quarter. We'll see. Obviously I have some other projects I'm doing, but no promises. So that's pretty much your weekly closing overview, where we are having a divergence in credit spreads, where credit spreads are going down, but the market is going up. And who's right? The smart money or the dumb money? And oil, we're not unsure if it's going to go higher. We're unsure if the gold will go higher. We're unsure if there'll be no fragility. It seems like the fragility is here to stay, according to the Japanese yen. We're going higher and higher, and we are getting a little higher and higher in the VIX, where we're still coiling. We're back into no man's land, beneath weekly support and above daily support. So this weird kind of zone where it's just coiling up, getting ready. And I would like to think that it's in line with Timing Solutions, that somewhere around after the first week of January, we might see something, and hopefully that's it. Like that, this is it. That it's the elevator to the way down, all the way in the first week of January. And who knows? I mean, it possibly might not be that one, but I'm thinking it is. We'll see. So we'll consult the Money Flow Index as we go. Right now, both the Timing Solutions and Money Flow Index are saying it's time to go up. So that's why I cut all my shorts, put some longs on, and we're going to wait until we hit our target or get somewhere close, or the target date here on Timing Solutions after the first week. We'll see what happens. See you on the flip side.